Well, good day, everyone, and welcome to this Thursday's FS Club webinar. It's a real delight for me because we're going to be talking about a topic dear to my heart, and that's very much investing in the future, channeling capital towards an inclusive, net zero, carbon and resilient economy. You'll know me, I'm Michael Mainelli. I'm the executive chairman of Zien, and it is my delight to be able to chair these various webinars that we host, principally because we have such a great group of sponsors. Our sponsors are extraordinarily tolerant and allow us to range widely and freely across technology, economics, and finance on issues of relevant importance to today's working population. As you can see, many of the individuals here are involved in the technology, the economics, and finance of climate change. But in particular, today I have a guest, Sir Roger Gifford, a fellow alderman and chairman of SEB, the very famous Scandinavian bank. What I love about Roger, frankly, is that he is just so enthusiastic about climate change. Far too often we get into this subject area and it's depressing and the world's going to hell in a handbasket if we're not all going to burn up first. But what Roger's going to point out is, one, let's do something about it. Two, there are good things that can be done. And three, there are some successes. And he's going to share quite a bit with us today in a fast-paced and lively manner, which I know he's famous for. Now, as you know, we take questions through the GoToWebinar question facility, and I will feed them in to a discussion with Roger after his presentation. Roger will be speaking for approximately 20 to 25 minutes, but please do get your questions in early up on the chat bar, and I will try and feed them in. Earlier questions get answered first, strangely. So that'll be fun. Please don't email me your questions. I'm actually here with you, so I'll only get them afterwards. All of the questions and answers will be sent to Roger with your emails so that he can respond to you if there's a point of detail or you'd like to contact him. Just let us know. We'll send that on to him. But my job is to get out of your way. Roger, the floor is very, very much yours.
Thank you very much, Michael, and thank you for your kind introduction, and not least making me chairman of SEB, which would be fantastic. I probably wouldn't be here on the screen if I was, but thank you very much. I'm working here at SEB in London, where I've been for nearly 40 years. So I'm very excited to be having that party when it comes. But hello, everyone, and thanks very much for joining. I think this is one of the most exciting areas we can be in today. It's around this whole green revolution. COVID has made us even more conscious of that, how we live, what we eat, what we wear, how and if we travel, what we do with our lives. And it's as though the environmentalist movement is having something of a perfect storm. It's not new, it's been around for a long time, but they're having a heyday. And there's this kind of government determination all over the world to reach this net zero. There's financial and investor interest. There's the banks adore green finance because it's demonstrably good finance to be doing, and so on. So it's just been a very exciting area to work in. And Michael, I know that you are very familiar with it too. It's really, in the last 3, 4, 5 years, just taken off. And I think there's some very good reasons for that. Next slide, please. Because the story of green finance is really a story of the green revolution, and that's one of technology. And it's really interesting to look at how technologies tend to develop. And typically, product revolutions take a kind of 30-year incubation, followed by a 30-year period of disruption, followed by another 30 years of stabilization. This is a gross generalization, but it's not bad in a number of separate industries. The first 30 years of incubation see the technology developed below the radar until cost or efficiency parity is reached. Then you start to see a killer application very often come up. I've got some examples of that coming up, like the Carnegie Steelworks of 1875, all the way through to the IBM personal computer. There's then a period of stabilization, which sees greatly increased regulation to make sure that the gains are passed on to customers. And I suggest that with IT, for instance, we are just entering that third period. The big players are so wealthy, they need taxing, they need regulating. We need to pass on some of those benefits to consumers elsewhere, exactly as has happened in previous industries. And here we see steel, electricity, autos, internet, a very similar pattern where it takes around 60 years to break through to maturity. It's peculiarly around the same, as though the lifetime of a single man, now here's your philosophical bit, Michael, the lifetime of a single man or woman is the kind of about the amount of time you need to see a technology really break through. Each of these can be looked at separately. The internet, particularly recently, has had a more varied path, but again, it's roughly the same that's happened in terms of time as well, with different speeds in different countries. The average has been about the same. Next. And on the next one, thanks. On the energy transition, it's a technology revolution that's happening, but actually it's been a bit arrived a bit late. And you can say that really the climate issue that we have is really a technical failure. And it's a technical failure because whilst we've been encouraging Asia, China, and all the rest to expand at massive rates over the last 30, 40 years, we have not had the energy source to match that in carbon terms, in clean carbon terms. And what we're seeing with energy now is that the renewables that are coming through to meet rather late this extraordinary demand that has come out of many economies in the last 50 years. We are now seeing this come up from nowhere. It's come up to cost parity. The volume increases are happening very fast. We're going to see something like a 20, 30-year period of disruption where the primary technology scales. There'll be a secondary wave of innovation for users. We're going to be finding lots of new fuels, probably around hydrogen and around ammonia. We will probably see government intervention to make that happen faster because there is such a great degree of concern around it. And we'll then, in something like 20 years' time, we'll see a period of stabilization around the 2050 period. It's likely. Nobody knows, but that I think is very much likely what's going to happen. But on these technology shifts, what is absolutely key for an investor and for banks who are financing companies, that when you're investing your capital, buying into better technologies on a falling cost curve and embedding those factors into your business model, this is the common driver of long-term competitive advantage. And that's how we will bring sustainability through capital allocation, through capitalism, your pension and mine, into the right stage. So the technology failure I mentioned, there's that nuclear curve, very interesting, completely failed, died in the early 80s as a result of worries about, very valid worries about what you do with spent nuclear fuel and how the rising cost of actually producing it, at the same time as China entered this fantastic industrialization stage, which resulted in a doubling of fossil fuel consumption. And there's an interesting learning curve for solar there in terms of the rise of solar. There's another slide coming up on that, but just showing how during that period we've had this extraordinary cost per consumption curve coming down. Next one, thanks, Michael. So there's this lovely academic thing called the KAA Identity, which basically says that the way of measuring carbon dioxide, and it says that carbon dioxide as a greenhouse gas is a result of population, GDP per capita, energy per GDP, and of course the amount of CO2 in the energy. So if you want to see the carbon dioxide go down, and you can't fix population and GDP per capita, you have to do something about the energy per GDP and the amount of CO2 per energy that is being produced. It's very simple in that respect. And that is where the money is going in those last two, into finding out how they work. Next slide, please. So I mentioned earlier about the killer applications, and I think this it's a nice slide. It shows that, you remember those old IBM personal computers we all began to see in 1981? Aren't they fantastic? And look at what we have in our hand today. Very different technology, but basically the same curve all the way through. So who knows where the Tesla Model S is going to lead us in terms of driverless electric cars. Maybe they'll hover off the ground, but we are definitely in the development phase for this extraordinary revolution in electric cars coming up. And next slide, thanks. And so when we talk about how to profit from this, from the green energy disruption, here is a supposition curve of where we should all be investing and thinking about going in terms of the energy disruption that's coming. So if we say that we're around 2020, we're down with the upper curve is solar cost against electricity, CPI. The lower one is solar and wind and oil and gas. On the right-hand side, showing the volume increases, and we're going to get this crossover curve somewhere around 2030, where we see, after many decades of exponential efficiency gains, we're not going to see the tipping point. We saw the tipping point coming around after 2010. We're going to see a radical change, very likely to see a radical change if this follows previous curves coming up. So in terms of investment, new technology needs subsidies, it needs the idealists, it needs these killer applications, and it improves as more users join the experimentation and the learning process, and it becomes disruptive after the tipping point as the scale reaches a macro level. Next slide, thanks. A particular example here on solar energy, this wonderful park, currently the world's largest solar farm in Benban Solar Park in Egypt, where the World Bank provided a 38 billion loan, which I'm delighted to say we were part of. Enormous amounts of investment currently being made, not least by China, into solar energy, of which this is just one good example. You can imagine the amount of potential there is when the cost of solar panels come from $20, or sorry, the production is $20 a megawatt, comes down to what they reckon could be just a few cents per megawatt. That is the target that's being reached for. A little bit like the explosion and extraordinary change we have seen with on the IT side. Next slide, please. So here is actually a current graph of where we are roughly today in terms of the solar share. On the black curve is the solar share of total world consumption. On the other side, you have the real cost of solar energy, and it is coming down and down and down. This is old stuff, I know, but it does exemplify the point about the radical transformation that's coming up. Next slide, please. So when we talk about electrification, the potential is actually much more than just light and power. And I think that's worth remembering, because in terms of where we can take this industry, it can go very big. It can take a lot more of traditional forms of heating, traditional forms of industrial power, and particularly of cooling, into a new arena through very cheap electricity. If we reach that, if we get there, if we don't decide there's something terrible about solar panels we haven't realized yet, or hydropower, this is the potential direction for going in. Next slide, please. So we can anticipate a much bigger market for electricity going forward than we've currently seen. That's why I think we are looking at a world in the future is powered by electricity in a much bigger way. We'll have broader definitions of sustainability. And as Michael said, yes, I do believe the future is bright, and it is circular, which brings us slightly to the second part of the discussion, which is around biodiversity loss, which is high concern today, and where we have the David Attenborough film, we have the Partha Dasgupta review coming out shortly. I think this will be the next major area of concern for all of us after we're not dealt with climate. We haven't reached a solution on climate yet, but we're definitely on the right path, I think, in terms of investment in the new technology that's making it happen. It's not so clear where that is on biodiversity, but we have to see this whole circular economy in one way. Otherwise, we are, according to the scientists, according to everything we hear, and according increasingly to government opinion, we are seeing a radical shift in the economics of nature as a result of biodiversity loss. Next slide, please. So when we talk about this internally, we talk about the need to start with the factors that we can control inside our own companies, of course, both in measurement, both in terms of our practice. We then all need to learn to embrace these circular networks and take on responsibility for a whole supply chain, which then leads to our part in making everything sustainable. This is a conversation that I think I'm having almost on a weekly basis, not only inside the bank, but with the many other players too. The feeling of the need, it's accelerated by COVID, that we need to take a much more responsibility for the environment we have. It doesn't have to be unprofitable. It can be very profitable. We just have to find the right areas to make that happen. Next slide, please. So we're talking about moving, transitioning, if you like, to a new sustainability model. And this will affect all the sectors that we currently lend to, that we currently bank with. And this is, I have short to say, this is my SEB bank research, not external, because we are looking very closely at areas we think are going to be winners and where they're going to be losers, according to this model of this new sustainability model, which sees a kind of approach to the world in a much more circular, inclusive way. We reckon there are two dimensions of corporate sustainability. There's a horizontal, what one are we in? There's a vertical one, what the company does. Each of these comes with some kind of embedded exposure, which is defined by the technology space that's possible today. And within each sector, companies can move up the chart by transforming what goes on inside the company and by transforming their interaction across the value chain. And this is the kind of analysis we find ourselves doing a lot with traditional steel companies, with traditional forestry product companies, or with all the different kinds of bits of shipping and the oil and gas industry that we specialize in, of course, up in Scandinavia. Next slide, please. That takes us to a broader definition of sustainable finance, going way beyond green to help rebuilding the economy. It means we're moving towards a, well, maybe this is all very clear, and I don't want to be teaching my grandmother how to suck eggs in any way, but what I think is different, and it's different, Michael, from the work that you've possibly were doing it as much as 20 years ago, that today I think bankers and investors are getting much better at putting meaningful definition on the risk and therefore the opportunity that we're seeing. And actually a lot of the work we've done inside the City of London around the Green Finance Initiative, the Green Finance Institute, is around that risk assessment and around looking at the commercial opportunities that come. We're not talking about giving up return for investing in a sustainable future. This is about doing good, yes, but it's primarily around maintaining returns for our pension funds, for your pension and for mine. And I think we now have more of the measurement tools and the products to match, and I think we can make some good progress on this. Next slide, please. What this means for companies is very much that it is about new business models they have to adapt. They have to look at the drivers behind circular business models that are out there. They need to adopt more sustainable, less complex business models, possibly. These are likely to intensify. I think many forces have combined to highlight the operational vulnerability of some complex global supply chains. I mean, your share price doesn't do well when the government of XYZ country happens to expose the fact that you've been misled on your sustainability certificates, which you thought you had in place for the kind of particular product you were buying from whichever bit of deforested land it was. There's much, and companies know this, and companies are onto it. And I think there's a very positive move by the major international trading companies and the mining companies, I have to say, towards trying to get a global consensus around what is the best practice here. So we're seeing a lot of changes. They haven't come in yet. More needs to be done, but I think the combined effect is going to be a profound change in our basic business model. Which takes me to my last slide in this section before I just do a couple of market stats, Michael, with the 6 minutes that you've given me left. And that is to say that the bottom line is that we as a bank are looking very carefully at the new investment themes that we have to deal with. There are some characteristics of the old, characteristics of the new I've written down here, which was very much product oriented in the past. It's going to be very much society. It's going to be very much circular oriented in the future. All the companies that we speak to are there. I think they don't all understand it. They're not all in the space, but they're very much thinking along the same lines of taking responsibility way beyond their normal limits of responsibility. The idea that a company is just producing steel is no longer any good, or just producing cement. How do you produce the cement? What are you doing it for? Where are you selling the cement? Where are you getting your materials from? Have become much bigger questions than they ever were before. Just a few stats about the market, because I think one of the other exciting things, next slide please, that we've seen around many of the participants in this has been this transformation. This famous Danish oil and natural gas company in Scandinavia, which has now transformed itself into Ørsted from 2017. The really exciting thing here is the next slide, which shows how their market capitalization has benefited as a result. So here you see real transformation, real benefit to the share price, considerably high. Now, I'm sorry, this is already 1 year out of date, which nearly 2 years out of date. That's terrible. I apologize for that. But it has even accelerated much further, particularly during COVID. Ørsted is now one of the best capitalized energy companies around Europe, and it's not the only one in this space at all. Equinor is part of the way along. We're seeing very different stories from BP and Total and Shell already. We are seeing a transformation in the energy market because these guys, they know which way the share prices are going, but they know which way the technology is going too. A sustainable asset market, next slide please, is already becoming more diversified in the way it is. We're seeing a lot more around sustainability linked loans. We're seeing social bonds. I've got a couple of examples of those coming up. So on the left hand side, you can see that the issuance July to date is clearly coming up way above the kind of $500 billion mark. You know, I remember just 5 years ago, Michael, we looked at this and we said, oh, if we ever get to 100 billion, won't we be doing well? And look at it now, and it's only accelerating. Investors love this stuff. We bankers, we love to issue it. It's great. And then on the right-hand side, you see the increasing proportion we're seeing of other types of bond coming through, labeled, purpose-driven, sense of social responsibility behind it in all parts. And that's what makes it, of course, feel good, but it also makes it quite fun to deal with. In particular markets, next slide please, we are seeing a real change as well. I normally try and animate this and show how well Sweden is doing. That's the green line at the top, with an extraordinary amount of local currency issuance in green bonds. In fact, there are some sectors of the Swedish bond market you can't issue a bond unless it's green in some of the housing sectors. In other markets, particularly United Kingdom, it is a very different story. Quite a good story in some like Australia, Canada, even the United States with the tax-driven bonds that they have. So we're seeing some transformation there, and there's estimates that we make that fully 1/3 of the Swedish krona bond market, not the biggest bond market in the world, but still a very fine and well-efficient market. Fully 1/3 of that market will very soon be green only. Investor preference, opportunity, technology driving all of it. Next slide, please. We're also active on the emerging economies. We've seen a lot of green bonds brought out by Fiji, by South Africa, Chile, Poland. We've seen blue bonds by the Seychelles. All of it with this sense of defined purpose, with a defined purpose, which gives people a sense that they're trying to do the right thing and put finance in the right bucket. Is it perfect every time? No, it's not. Is there never any greenwashing whatsoever? No, but the direction of travel feels very clear. And for an investment banker, this is an interesting spot to be in. Next slide, please. Here's an example of a lovely little social housing bond we made for the NWB. The exciting thing here was this 23% reduction in evictions at the bottom left. 2.5 million households benefited from sub-market rents, stable housing conditions, very much taking care of the kind of people who can't normally afford their housing. And particularly, I had to say there was a which was brought out by this was the reduction in crime as a result of people living in better housing. Sounds very simple, it's very straightforward. Again, a purpose-driven bond. Next slide, please. We had a lot of fun with a red bond, we called it, a vaccination bond, last year for 60 million, where we were helping to accelerate the development of new vaccines for dangerous diseases, making them more affordable. What's so special about this? Well, actually, you could have done it. You didn't need the vaccination bond label on it. It was just fun to do, and everyone enjoyed buying this, not least the investors. Next slide, please. Here's a lovely bond by Anglian Water, where they launched a 250 million bond a couple of years ago, totally transformed the tourism opportunities in this particular part of the Norfolk Rivers Trust, where they are enjoying a boom locally, or they were until COVID happened, around tourism and visiting this lovely new bit of land, which was basically made possible by Anglian Water investing in these wetlands up in the Norfolk, Ingoldsthorpe. I don't know it very well, but I have been there, and it's a lovely place. And I think another bond, just to show you, anyone who's not seen these gets very excited. Blue bond, which we made for the Nordic Investment Bank, all about cleaning up the bits of the Baltic which have got dirty. Tourism, the direct beneficiary. Lithuanian vodka, a key in that sales of Lithuanian vodka. I haven't tracked them recently, but I know they went up immediately as more people came to visit the region and enjoyed cleaner seas. There's also a big project around the Slussen in Stockholm, for those of you who know who's Sweden, about the redevelopment of the water locks to mitigate flood risk. So there was a very practical element to this, as well as just the benefit of tourism. Nordic Investment Bank doing a great job there. And my very last slide to leave with you is what I want to see happen in the UK. Here is a 30-year journey by Sweden, changing its gas boilers from gas and a lot of solid fuel up in Sweden, particularly in the countryside, to basically district heating and geothermal. It's been a 30-year journey. And just an extraordinary reduction both in the carbon that's been used and an increase in the recycled and biofuel energy at the same time, with the reduction in fossil fuels. So how do we do that in the UK? And that is the work of the Green Finance Institute, which the City of London is backing along with government, to find out how we make this kind of transformation happen in the United Kingdom. Terribly exciting if we can make it good. Every housing market around Europe is different. We've just done a study on different housing markets. And you can't say, well, what works in Sweden works here. You can't say, well, what works in Germany or Holland works here. We're different. We have different mortgage market. We have a different housing regulations. We have different housing standards. But we can achieve this kind of transformation. So I'll leave that slide with you, Michael, and finish there. Thank you.
Roger, that's fantastic. And I must say, I say that with a sense of great jealousy. Not a single person has left, which is certainly not the case for some of my presentations. So that is absolutely fantastic in this day when people can kind of slink off if they feel like it. Well, mind you, I can see what they're up to, but that's not the point. So you've obviously captivated us. You've put forward a tremendous amount of information in a short period of time. Sham Turnbull is down in Australia, and he says intellectual overload for a late night audience way down under. So that's good news. And lots of people, Trevor Hilder, Liz Russell, brilliant, great presentation. Deborah Webster, great presentation. So great. So a lot of compliments there. So thank you. Well, let's get into it. A couple of things. Firstly, just quickly, you touched on the Green Finance Institute, and I wanted to give you the opportunity for two promotional elements. So the first is, could you just give us a 30-second pitch on the Institute, what it does, why it's important, and what we should expect from it?
Yeah. Okay. So when the government ran a Green Finance Task Force 2-3 years ago, which I chaired, and which said basically how do we handle this? How do we meet our climate goals? Long before we even came out with the net zero. But we're quite good space because we got the Climate Change Act 2008 here. We have a clear trajectory to reduce carbon that we're producing, and that means, whether you believe in climate change or not, there's a certain direction that we're all going in. And the task force recommended the Institute, and the Institute has as its mantra to be ruthlessly practical about finding ways of solving exactly this kind of problem. So the first coalition that it formed was around the energy efficiency of buildings. It brought together 150 people, 70 different bodies, from house builders and house regulators through bankers and investors through to the government and government departments, all talking about the problems of our ancient building stock in the United Kingdom, our lovely 19th century buildings, which we all adore, but are terribly inefficient on the whole. We're not talking about new buildings, we're talking about old. And the coalition basically looked at all the problems there are and then came up with a series of recommendations which fed directly into Sunak's Rishi Sunak's budget back in July, we are delighted about, and has formed a kind of model which we will use for the next one, which is probably almost certainly around how we heat our homes. We have 26 million gas boilers in the United Kingdom. Sweden has, I don't know how many, very few. But to achieve that kind of transformation, we need to find very clever methods which will involve finance, will involve the banks and the mortgage societies, as well as just finding a neat solution with stamp duty or with some kind of subsidy or incentive. We've tried this several times before in the UK. It doesn't always work. We had with the New Deal back in 2010 for insulating people's houses. It turns out people don't like insulating their roofs because they can't be bothered to go and clear out all the stuff that's up there. So it didn't happen. So you've got to be clever. We've got to find the right financial inducement to make this happen, because it's expensive to turn your house from into a completely kind of or your building into a completely green building. You've got to find ways to do that, and that's what the institute is planning to do. It's run by a super lady called Ria Marie Thomas, who's an ex-Barclays capital markets banker. I'm a capital markets banker, and we hope we are being very financially practical in the way that we're looking forward to this. It's currently about 10 people. They're looking at going up to 25, 30 people if they can get the money to do that. But it's a lot of demand for what they're aiming at.
Yeah, so we had Professor Damaris Kaufman on just a few days ago. She's the dean of the Bartlett School at UCL. And she made the point that at the current rate of renovation to green for the existing housing stock and infrastructure, Britain will take approximately 2,000 years. In other words, the buildings will have crumbled by the time we get around to doing anything. But what I love about this slide and your story here in Sweden is it can be done.
Yes.
And that's the thing we have to tackle. So it's great to hear that the Green Finance Institute is there. And the second promotional slot is, I was wondering if you'd share with the audience a little bit about the forthcoming Green Horizon Summit on the 9th
Yes.
and 10th of November.
Absolutely, which a number of us, including you and my colleagues Alison Gowman and Vincent Keaveney and others, are involved in. This idea came when we cancelled COP26, or when it was moved on a year. So I thought we have to do something, let's do something the same days. And we came up with this neat title, the Green Horizons Summit. Now, the word horizons was in there partly to persuade Mr. Mark Carney that he would love to be involved in it, and he he is. He was very much the co-invitee with invitor with the Lord Mayor of London. So on the 9th, 10th, and 11th of November, we are holding a really what I think will be a spectacularly, I would say that, wouldn't I? I think it'll be a really interesting conference about where we are on this whole journey, what we want to aim for with the COP26 coming up in a year's time, being held in Glasgow with our partners in Italy. What's the journey look like? And no one is saying we've solved climate. No one is saying we've solved the energy revolution, but there is a clear path. And the path becomes, to me, clearer every 6 months that goes by, both in terms of investor and bank preference, but also in terms of the technology, in terms of government determination to see things really happen in the space. So as I call it, not the COP26, the Green Horizons Summit coming up on the 9th, 10th of November is very much about taking stock, about hearing from some of the world's leaders, the world's really good figures who are coming along. Do look up the website, go and register. And it's being promoted by the GFI and the City of London Corporation, together with the World Economic Forum, who are coming in as partners too. So I think it's, it's going to be, a lot of it's going to be very interesting.
Great. I've got a couple of comments here just to feed into you. Robert Winthorpe Brown says, great to hear fellow Prime Master for the second time this week. I believe that both you and Robert were masters of your livery company in the same year. That's the reference. Prime Master is your group. Robert goes on, though. He's what worries me about all major investments, not just green, oil platforms, nuclear, wind farms, solar arrays, is that the decommissioning costs are not taken into account. It's the consideration for creating the temptation for investors to close companies and leave the taxpayers to clean up. And also the rare materials used in areas like solar are very polluting. We've certainly seen this over the years in the oil industry, which is kind of, well, I'm bossed with the mining industry. Well, it's a big hole in the ground. You better clean it up. What are your thoughts on this?
This is not. I mean, for all my buoyant enthusiasm, if that's what you interpret, this is not a straight. This is no. Of course, there are barriers. Of course, there are difficulties. I mean, and the problems of the nuclear industry are huge. That we absolutely have problems. We'll have problems with decommissioning of wind farms as well. And I think there are some clever things we can do with old oil wells. And I know one company that's looking very hard at how to use those for geothermal heat, because you need the depth. But I think the issue of the stranded assets that we are going to have, and that we have to allow for that. We have to make a financial scheme which can see them like rotting old ships on the beaches of Vietnam. We have to find a way of dealing with that, and that is absolutely a problem. So I think part of the discussion around this wonderful investment in new technology has to include the decommissioning involved, and that will be a cost. Having said which, I don't think that the cost is insurmountable at all. And I think when you break down what the world says it needs in order to take itself from here to 2050 in green terms, it's significant, but it's not so much more than the average infrastructure spend that is made by many nations as it currently stands. Is it fast enough? Is it fast enough, the environmentalists, for the global climate change we're meant to be seeing? I don't know. And actually, I don't feel like an expert on climate change at all. I just know that we should be promoting this as quickly as we possibly can.
Yeah, lots of questions here. So Andrew Ross is asking, HM Treasury is supporting the proposed reform of the planning system by the Ministry for Housing, Community and Local Government by providing a debt service guarantee to enable local authorities to borrow from the bond market for sustainable infrastructure projects. He claims it opens the way for the issue of municipal green bonds in the UK. Could the Green Finance Institute convene a task force to take advantage of this opportunity? Personally, as you know, Roger, you and I have discussed, one of the difficulties in the UK has been getting a municipal bond market going because of the centralization. But anyway, what are your thoughts on this?
No, I think thank you, Andrew, and it's always from you a good question. When the next coalition is formed around how we approach the whole thing of home heating, this is going to be one of the subjects there. And how do we find that kind of what are the financial methods by which we will find local municipalities in particular able to kind of persuade with their own housing stock and with others to move in the right direction? I'm sure this would be one of the ideas, in fact, has already been mooted as one of the ideas to look at. I would love to have a municipal bond market. We've had this discussion before. We have a situation in the UK going all the way back, as Michael was saying earlier, to 1990 with Hammersmith and Fulham, when we have just not had a municipal finance market in the way that many other countries do. And I personally think this limits the imagination, limits the possibilities that we could be putting in there for different municipal solutions. So we do have some amazing little companies like Abundance who are doing crowdfunding for local community projects around pollution and around energy. They don't do the scale we would like to see and that we need to see, arguably, yet, because of the nature of the business, we don't see the scale that we would like to see across the whole of the United Kingdom. As you say, 2,000 years, we haven't got that amount of time. So thank you for the question.
I might refer listeners, there's a report on this by Simon Mills and me on future smart cities on the ZN website that covers some of the options, but it particularly contrasts 7 cities across Europe, Northern Europe, only 2 of which are in the UK. And this is a big gap. And so I think Andrew's right to point it out. Bob McDowell has a slightly loaded question. Do you think the government regulation and legislation of new energies will include adoption for the same intrusive utilities oversight that was adopted during the 20th century?
Haven't a clue. That's an easy way out, isn't it? Of course, regulation will be required, and I'm speaking to Kwasi Kwarteng actually just yesterday on the need for regulation in this space. He's the energy minister, as I'm sure, or maybe you will know, and how we regulate particularly a proliferation of local energy production, which is one of the solutions. We all have our own windmill, we all have our own watermill, kind of idea. How you regulate that proliferation, both with the kind of cowboy producers on the one hand, and then how we feed into the grid on the other. These are big questions, and they have not yet been solved for the kind of markets that we want to see in renewable energy, local renewable energy coming forwards. So, but the quick, easy answer to your question is, not being a government official, I don't know.
We'll just stick with this for another 60 seconds, because personally, one of the things I've noticed lately is people who wouldn't touch solar a few years ago are now saying, well, I want to see something, well north of 10 megawatts, or I can't be bothered, but I can't find enough supply. So we've sort of seen this enormous shift from I can't even look at it to, my gosh, how can I put large sums there? So Bob continues, do you see business consolidation operating in the green finance sector? If so, what will trigger it? How will it occur? Do you see the same monopoly threats as have occurred with traditional utilities?
If I take the second bit first, I don't think we'll have the same monopoly problems because we're already seeing such a variety of people coming into the market, and it's not essentially completely free competition, but there are many different players, many different utility companies, both UK and foreign, who are coming into this space. And so I've less worry about seeing a monopoly. What I don't have a feeling for is what the proliferation leads to, because when we have developed a battery technology, and if we develop a technology which produces cheaper hydrogen, and we're then going to have a discussion about electric car batteries versus hydrogen engines for cars. And I wonder where that will come out from both from an environmental point of view and from a cost point of view. And I think there's so much uncertainty there that it's very hard to predict at the moment because hydrogen is still that much more expensive to produce, even on a kind of clean electric basis as opposed to sort of from gas-fired power stations, or from natural gas. But what I'm sure of is that this is an area to be very excited about, and that the trend that we are seeing on renewables is going to continue. Exactly who wins between battery and hydrogen and wind and solar, I'm not sure. I feel personally that some parts of the world are much better for wind and solar than others. For instance, if you go to the famous trade winds area around the equator, it's a no-brainer for Africa to be looking at massive wind farms off the coast of Africa when now the technology is where it is and the cheapness of what it is. Some of the waters are deep, too deep to go into, I understand, but there are many other areas which it's just that should be their energy of the future, not coal. Similarly, in vast desert areas of northern Africa, when solar comes down, as the Chinese expect it to do, from $20 down to a few cents, again, it has to be something that Saudi, that the Gulf states, that the Northern African states would look at very seriously with serious amounts of, and large amounts of investment there. Now, the technology with which we produce solar, the amount of water that's required to produce the panels, and the amount of the environmental degradation which is possible, that will become a cost, and that has to be handled in the right way. If there are examples of wind and the mining that's used in the production for that, and also for the solar panels. There are examples where, we haven't got it completely right yet. Again, direction of travel for me is clear. We have to get better, and we have to expose and talk about and use all the powers that we have to kind of get it in the right space. So it's not like it's completely free going forwards, but it's certainly looking technologically and cost-wise interesting.
Roger, this is a very rich webinar, and you've covered a broad range. So if any of these questions that come up you feel are not your space, just say so. But there's quite a bit because you're trying to cover technology, economics, politics. Mark Cook, you have a position on nuclear.
I'm in favour of it. I think I'm quite interested in the technology of small nuclear. If we can put it on a submarine, why can't we put it on a ship? So I think there's a real future there. There are also new nuclear technologies coming forward with heavy water, which I'm told are very interesting and worthy of appraisal and possible investment. Again, I think all of these will be thrown into the mix as we move strongly away from fossil. But I read chemistry at university, Michael, so I'm trying to be scientific here, but I'm not up to speed on the latest technologies.
That's good. Well, Alexander Mackay makes a positive statement in line with chemistry, and also your point about recycling. Construction is now promoting buildings and material banks as part of a move to a circular economy. Reuse, recovery, and recycling essential. Good stuff. Got another question here related to that last slide. Donald McRae would just like you to expand on what will replace gas in domestic heating in the UK.
I think it'll be a mixture of wind and battery over time. I think and hydrogen. I think hydrogen is a real potential. It's going to take longer to come because there are still big technical issues around production of and storage and transmission of and use of hydrogen. But having said which, we will have gas for many years to come. There's no doubt about that. It's not like we're phasing it out in the next five, even 10 years. So there are also investment in carbon capture, which you will all have seen and read about even just this week. So again, I think that the mix of technologies it will be varied. It's not like there's going to be one thing that solves all our energy requirements at all. There'll be a whole mix, including I think more on the local scale. I'd love to see more waste to energy. I'd love to see more local community heating done, which would probably possibly be from waste or could be from biofuel. Biofuel, I feel a bit mixed about, I have to say. I'm never quite sure why it's meant to be so carbon free when actually you're burning wood, even if you're replacing the wood. but anyway, so I think our final energy mix will be energy maker will be a mix of many different technologies coming in there, which is part of the excitement. What's important, of course, is the government is behind that. It's not like they're trying to fight against it. They're really actively supporting ways to move that forward. Gas, I think, is going to be around as it is, as you can still see in Sweden, still has a significant amount of Sweden on that slide, for many years to come. It may be the fail-safe that we need, like nuclear. We need a base of 10% nuclear to make sure that we always have one stable source of power. Gas is also a very stable source of power. Maybe we'll be better at carbon capture with it as we approach the kind of 2030 levels.
Yeah, it's interesting because there's some tricky decisions here. For example, a number of commentators have pointed out that the UK government's declaration of 2030 or 2035 is the end of petrol car sales. Of course, to some degree means hydrogen won't have a look in, the electricity base will be established, and we'll go battery with some of the attendant risks there and pollution, simply because we've indirectly basically chosen the technology rather than let it run. Christopher Gleadle has a very long point, and you've touched on some of his points, but he thanks you, of course. Detailed presentation in a short space of time. He talks about 3.6 trillion has been spent mitigating climate change from 2011 to 2018, with 55% being spent on wind and solar. But these have got many disadvantages. 5% has been spent on climate adaptation, even though investing in adaptation can dramatically improve the ability of societies. Anyway, he's looking at the disproportionate investment, and some of these areas, the interaction between fossil fuels, end of life issues, which we've talked about, etc. Where can we get this robust audit of environmental return on investment?
Yeah, that is a very good question. And let's face it, we haven't, or we, the government, well, all of us, we haven't got this completely right yet. There's no doubt about that. I think there are many bodies now that are not only producing really good carbon data, but they are tracking the kind of whole environmental circularity discussion as well. We are, through the Green Finance Institute, we're in touch with a number of them. I'm not sure there's a clear carbon tracker is clearly one, carbon data clearly another on the carbon side. On terms of the environment is a complex place, and it sounds very obvious to say that, doesn't it? But every time you kind of try and squeeze in one little bit of deforestation or land degradation, you get hit with another kind of another factor which comes out, and then you think you're doing well producing solar panels or batteries, and you find actually no, it's a terrible situation just happened in the mine where that lithium is produced. So getting it right takes time, and exactly like earlier product revolutions, I think we will see many years, 5-10 years from now, before we really feel we have a handle on whether we're getting this right or not. Now that might sound crazily long, but actually I think the one significant thing we all know from COVID is that carbon has gone down this year. Estimates as much as 6 or 7% for the year, even though China's back and roaring now. But short of a pandemic, which makes us all completely change the way that we live, travel, and eat, I think it's going to take a long time before we have a really good idea of whether we're winning this battle or not. What I'm sure of is that it's the right direction, and we're going to find the finance to make it happen, which is the exciting bit. How successful we're being after the last 5 years, has overall carbon dioxide production gone down? No, it hasn't. On a global basis, no, it hasn't, despite all the efforts and all the green finance we've raised. So let's preserve a good, healthy investor-like cynicism about this whilst we forage ahead in what we think is the right direction.
Yeah, we do find these unintended consequences. The one I found most depressing personally were fleeces, and we thought those were great when we could recycle them, and it turned out we were doing microplastics, and yeah, we've got a lot to learn. Is the case. And I think as well as we're looking at this, there's a pretty good question to close on, in a sense. I mean, you're right that COVID has shown that we can go down 6 or 7%, but it shows that behavior change and awareness in the gentle way is absolutely insufficient. We need this almost economic revolution that you've pointed out so cogently in your presentation. You are very bullish, and I love it, and I love enthusiasm. And in fact, we have a session in December about why environmental alarmism may be holding back the movement. A lovely author of a book coming over from America. But Deborah Webster asks, basically, in all of this, where do you think the headwinds are? What maybe one headwind we ought to watch out for?
Lovely question, Deborah. Very good. I think that I do worry about the economy, and that sounds like an obvious thing to say. But if we have levels of debt and reductions in economic productivity that mean we simply don't have government willingness, which is currently very strong and very positive, net zero oriented. If we don't have the money to make the investment and we can't motivate private capital alongside public as a kind of risk taker basis to make it happen, we are delaying like mad. Now, you could argue that if economy is going down, then we're going to be producing less carbon anyway, but somehow that doesn't feel like a likely answer to me, because it's still quicker and cheaper. Sorry, it's still quicker to build a coal-fired power station than it is to put in a whole equivalent new wind farm, even if the cost per production is maybe becoming lower in solar and wind. So when we're persuading all those countries that we're desperate to kind of make investments with, and we want to encourage them through, we want to get them back on track, we're encouraging all of them, and we say at the same time, you know, we want your economies to grow, but you can't put any coal-fired stations in, and we don't have the money to, the economy is not producing the surplus that we need to help make the right investments or for our own private capital to invest. That's a worry. So economic headwinds more than anything else, I would say.
Well, thank you. Your enthusiasm is what we need, but realism is also appropriate. Melina Mera
that was very much a realism question. Thank you.
It was indeed. Melina Mera points out the Green Horizons Summit takes place 1 week before London Climate Action Week. There's a lot going on. That's got London Climate Action Week as a theme of building a sustainable net zero London. I'm sure you're familiar, Roger, with the London Future Finance Facility, which you wanted to point out, the London Sustainable Development Commission, etc. But do you want to give us just an 8-second plug for people participating in the Green Horizons Summit?
I think, you know, we're moving to a world where you pick and choose. And somehow we've disintermediated conference organizers over the last 6 months. Everyone can organize a conference online in seconds. You could probably put one together in a day. So I would have a look at the agenda and pick and choose. Decide what you'd like to go to. I think it's going to be some really interesting global speakers there. There are some wonderful pre-recordings with famous people, which always interesting to hear what they've got to say. So you know, it's a pick and mix.
Good. And we'll get some links up on your presentation to that afterwards. Folks, as ever, and you always remind me I need to end because you send all these compliments to our speakers. Roger, lots of comments here which will get funneled over to you. I need to make 3 quick rounds of thanks. I'll turn to you last if I might, Roger. Firstly, a thank you to our sponsors. Absolutely amazing that you let us do all of this, and a delight to be able to take on and tackle such a complex subject, but with some very refreshing enthusiasm. I'd also like to thank you, the audience. You've been particularly engaged today. And I note that we had 1 person leave before the 45-minute mark. We have a number of events coming forward, so please do look at it. Tomorrow, a fascinating one on insuring policy risks. How do we handle the gaps in complex insurance policies with Parhelion? We're going to have sessions next week on UK challenger banks, particularly wondering whether this is really making much progress. We have a lovely session, Communities Chest, where we'll be discussing with Eka Swahi, her work as Secretary General of the Insurance Development Forum. And very finally, lessons from lockdown, reassessing how you manage your share plans in a digital way. The importance is we're trying to pull out of using your share capital to find ways to recapitalize your business. So a lot happening next week. But Roger, the final thanks is as ever to you. I really appreciate the time and the care and the effort you spent in it. You've packed more into a session than most, and we really, really do like that. And I'm afraid I can't open up the floodgates for applause, but I have here my Korean karmic clapper from my Buddhist temple in Bulgoksa, and I thank you on behalf of
Thank you very much, Mike. It's been a pleasure. Nice to see you.
Real delight to see you all.
Thanks.
And we'll see all of you again soon. Take care.